Do you feel under increasing pressure from shareholders over the length of time it's taking to restructure the bank?
No, I mean, obviously, we're very focused on shareholder returns and have been very focused since the day we arrived here on getting better stock price performance. But to do that, first we had to execute a pretty extraordinary restructuring over the last 2 years. We sold down some 95 billion pounds of risk-weighted assets. We sold 22 businesses at Barclays. We closed the bank in 12 countries. We sold our controlling position in Africa. In 2 years, we reduced the headcount of the bank by 56,000 people. We completed the restructuring at the end of 2017. So we got all this done in 2 years, and now the focus is on returning excess return to shareholders and improving our overall profitability. So we are as focused on making the changes to get Barclays back into a strong position. We have recapitalized the bank. That's another thing that we accomplished in the last two years. That's allowed us to more than double the dividend for 2018. So we're on course to deliver what we committed to our shareholders in March of 2016.
But is it taking a little bit longer than you thought?
No, I mean,
it was always going to be this tough.
Yes. In fact, in March of 2016, we said that we would close the non-core businesses of Barclays by the end of 2017. We actually did that 6 months early, doing it at the end of June of 2017. We gave ourselves 2 to 3 years to get the sale of Africa done, which is the largest capital markets trade ever done in that continent. We did it in about 1.5 years. So, in fact, we are ahead of schedule in the two main things that we sought to do for our shareholders and for our stock price.
What's the question you get the most, from your shareholders? Is it dividends? Is it buybacks, or is it about the investment bank?
I think it's probably split. Obviously, we are very committed to our investment bank. We think we have a great investment bank.
But do you get pushback on that from investors?
I think there's, across the industry, whether it's J.P. Morgan, Goldman Sachs, or Deutsche Bank, there have been questions about investment banking ever since the financial crisis. But we like the diversified portfolio that Barclays has, where we're both a consumer bank and a wholesale bank. We like the progress that we're making in the investment bank. We've brought in Tim Throsby to lead that effort, and he's put together a new team. We're investing in technology. So we feel very comfortable with where we are, but we do get questions, and we're going to have to answer those questions. But then returning excess capital to our shareholders, that's really what we got to be focused on doing. And doubling the dividend was the first step down that journey.
Jes Staley, what do you think your new shareholder activist wants changed at the bank?
Our head of IR had a brief meeting with them. We look forward to engaging with all of our shareholders. The modern shareholder today is very involved in what companies are doing that they've invested in, and we have a very active dialogue with all of our major shareholders. We recently had a new shareholder in Tiger Global. We've had a lot of engagement with them and Chase and his team. So we're always engaged with our shareholders, and now we have one more to make sure we stay close to.
Yeah, but the fact that they announced, the fact that they went up to 5.2% seems to be giving a clear message to the markets, to the media, that actually they want something changed. Do you know what that is?
No, I wouldn't say that, and Bramston hasn't said that. We look forward to hearing what his thoughts are. But I think any major shareholder, again, whether it's Capital or Tiger, that has a position of this size, is clearly keenly interested in what the bank is doing, and we look forward to articulating our vision for the bank and seeing what our shareholders have to say about it.
But you haven't heard from your head of IR that they want a split of the bank or shrinking of the investment bank. There's nothing tangible, right?
No.
He's not going to give an interview this afternoon telling us what he wants from you.
Not that I'm aware of.
Will you meet with him?
Yeah, sure.
And ask him what?
No, just I think I'd answer his questions more importantly. But sure, we want to engage with our shareholders.
Okay, what will you tell him about buybacks?
I'm going to tell them exactly what I've been telling the market, that we have an intent to deliver excess capital to our shareholders. The stock that the bank has not had a stock buyback for over 20 years. We do have the legacy issue of our RMBS litigation with the Department of Justice. We do want to settle that, and if we get that behind us, given that our CET1 capital ratio is over 13%, we should be in a good position to start thinking about stock buybacks.
Do you think 2018 will be the year when volatility is back in the markets, and what does it mean for your trading revenue?
You know, I said at the beginning of the year, and I think you were part of that conversation, that we thought there was somewhat of a disconnect between where the equity markets were trading and the fact that we were at historically low levels of volatility. And that a lot of that low volatility we thought was driven by people selling short volatility, such that if there was a move, the acceleration of a return to normal volatility levels would be quite quick, and that's what we saw at the end of January, beginning of February. What volatility does is it sort of prompts institutional investors to rebalance the risk profile of their portfolios, and that gets them engaged with banks like Barclays. And a lot of what we do is engage in transactions with institutional investors like pension funds, like mutual funds, helping them to rebalance the risk of their portfolio, which does change as markets move. So that obviously is a benefit to the investment banking industry in general, and Barclays in particular.
But are you confident that actually Barclays has the right kind of equity trading position? What does it mean for your FIG units? We saw a couple of notes saying that even if there is volatility back, like there was 2006, 2007, some of the key banks, and you were mentioned in there as Barclays, wouldn't actually have the capacity to really take advantage of it. What do you say to that?
Maybe what I'd point to is quite a historic transaction for Barclays. We were a principal M&A advisor to the CVS Health acquisition of Aetna. That's one of the largest M&A deals done ever. Then to do that, we wrote them an underwriting check of $20 billion. There's only been 3 banks in the world that have written an underwriting check of $20 billion. JP Morgan, Goldman Sachs, and a British bank called Barclays. Then on top of that, we led the 3rd largest bond deal ever done in the history of debt capital markets, which actually generated an interest of over $120 billion worth of demand, which is the highest book built ever for a bond issued anywhere in the world. So that might be an anecdote that I would use to underscore that Barclays is in the game. We have the scale, and we're very comfortable with where we're positioned.
Can your investment bank really compete with the JP Morgan and Goldman Sachs?
We just did.
Will you continue, or are
Sure.
Europeans actually at a disadvantage because of regulation, even because of Brexit?
Hopefully, one of the things that a number of us bring at Barclays, people like Tim Throsby, who came from JP Morgan, and Paul Compton, who came from JP Morgan, and myself, is we were at Morgan's investment bank for many, many years. So I think we know who we are competing with. They're an outstanding institution, and you have to give tremendous regard to JP Morgan. But Barclays clearly has the capability to compete and service our clients just like JP Morgan does.
What does improved equivalency for financial services mean for Barclays?
I think the Bank of England and the PRA and the FCA have done a great job of re-regulating the financial industry in the United Kingdom, making it much, much safer than it was before. We are night and day from where we were in 2008. I think the UK is committed to supporting the City of London as a financial center globally. Barclays, as a British bank, is committed to that happening. And part of that is making sure we recognize the regulatory environment that you see in the United States today, recognize the regulatory environment you see coming out of Brussels, and making sure that, first and foremost, the City of London stays financially safe and secure, and that banks are doing the right thing as a conduct matter, but also keeping an eye on making sure that we're competitive as a financial center.
But is it too soon to say whether all of those things that you mentioned will stay the same, or whether London will lose out as a financial capital in Europe?
One of the, what I said early in the year, which is an issue I think we all have to recognize, is the U.S. right now is very actively trying to make the U.S. environment as business friendly as possible. Whether it's dramatically changing corporate tax rates, 40% of Barclays' business is in the United States, and so moving the corporate tax rate down to 20% has a big impact on the bank. There's been a conscious decision to reevaluate the regulatory framework in the U.S. Given the size of the U.S. financial market, I think both Europe as well as the U.K. needs to keep an eye on what's going on as a regulatory matter in the U.S.
How much time do you spend? I mean, I know you have teams to do this, but how much time do you spend looking at central banks? Do you feel like it's kind of in the right hand? You have Jay Powell in his first FOMC decision today. You have Mario Draghi here. Could central banks, is it the biggest risk in 2018, or do you see a risk coming from somewhere else? Is it politics?
That's a hard question. What I believe, one, I think you have to give a lot of credit to the central banks and how they navigated post the financial crisis and have really used both their balance sheet and their interest rate policy to generate economic recovery. The challenge now is we have that economic recovery, and global economic growth is quite robust, and now you've added the additional stimulus of the tax cuts in the U.S. So now the central banks have to move from a mode where they are trying to accommodate economic growth by having very liberal policies, by low interest rates, by buying securities themselves. Now they have to pivot. And managing that pivot is going to be a real challenge. Given where growth is, given where inflation is, you have to see a move in interest rates, but you need to do that in a way that doesn't disrupt significantly the market and then constantly hurt the economy.
Okay, so but you know, talk to me about that risk compared, for example, of a full-blown trade war between China and the U.S. How would that affect Barclays? A lot of your clients, of course, are global. They're taking advantage of it. Would that hit your bottom line? Is it too difficult to model at the moment?
It's not too difficult. I mean, obviously, everyone benefits from economic growth. A recession would be challenging for all of the markets, and an out-and-out trade war would clearly be destructive for economic growth. So we hope it doesn't come to that.
Jes Staley, what's the latest on the FCA investigation? Do you have any updates?
No comment on that.
Okay, what will we hear from the bank in the next 2 to 3 months? Will you focus on the markets? Will you focus on what's the message to the market today? If I'm a new investor, if I'm your new activist shareholder looking at Bloomberg Surveillance, which I'm sure he is this morning, what's your message to them?
So this is the first year in over 5 years where we start with a clean operating model. So we have the bank that we want for the first time in many, many years. So I think the message, beginning with our first quarter, will be, what's the earnings capability of this bank now that it doesn't have a non-core to deal with, doesn't have assets that it doesn't want to have, has got its headcount to the right position, has got its balance sheet in the right place, is now firmly capitalized. So now what does this bank look like when it's running free?